most people, December represents a time to unwind, but for investors, it might just be the time to unwind yourself out of bad portfolio positions, or maybe you need to stick to your guns as the news flow gets worse and worse, particularly in the resources sector. This is The Moneymakers. I'm Bruce Whitfield. Tonight, I'm talking to two money managers about why December could be the time to get out of positions. Maybe it's time to get into new positions for 2016. Joining me, Joseph Busha from Busha Investments and Sasha Naryshkine, who's director at Vestact. And I suppose the most appropriate way to start is with 75 Rand a share for Anglo American. Going, but not quite gone yet, Sasha.
Yeah, so I mean, you've been watching markets for over a decade and a half.
Thanks for reminding me.
Yeah. Do you remember it ever being at this price?
No, I don't. And that's what's so exciting about it, because it's a wonderful buying opportunity. Just as it was when Joseph and Adrian Saville and I think Clive Ramatibela Smith and I think Nick Norman Smith sat here 12 months ago at 200 and something Rand a share for Anglo American and called 2015 the year of Anglos.
Well, it is the year of Anglos.
It was just not the way you want to go. Had you shorted it, you'd be in the money.
And there are some people, specifically in Cape Town, his name escapes me now, but there's a hedge fund manager who made himself pretty famous, and I've seen his name being splashed out because he shorted all the resource companies. So it's been horrible, and it's kind of been the year of the dollar, okay, and OPEC. So if you cast your mind back to last August, so everyone's been anxious about rates going up. That equals a stronger dollar, oversupply in all key commodities, and they've all just kind of broken once, broken twice, broken again.
And we've just seen the big announcement today, Joseph, from Anglo American, from our Kirivani, saying a massive restructure, take it down from 6 divisions down to 3 divisions. Let's simplify the beast that is Anglo American. Let's sell off non-core assets. Let's mine the cheaper resources we've got. Let's leave the rest underground. This is serious capitulation time.
I think I agree with you, Bruce. If you were at an auction, nobody would come because, I mean, you're saying sell it, who is next and so on. I think the price is so low that we would think the right time to go, but I don't think so. One of the key issues about some of these mining resources, they think basically the best way to get out of it in terms of restructuring is either retrenching employees or streamlining the business and sell non-core assets. But then what does it become? So this is now a new animal they're creating, because it used to be a huge diversified business. So what they're going to remain with? So that's a big question. But also the worry to show that possibly the hedging is not going to come to an end quite soon. They might suspend dividend payments. Yeah. So certainly I think investors might be sitting in pain, and I don't think it's time to get in. I almost walked away when you reminded me of Anglo when I entered.
No, but what was so interesting about that, though, and this is how quickly things do change, we sat around this very table, 4 money managers sat around, and each one of them independently put their hand up for Anglos 12 months ago. And the cycle has turned so much more aggressively than anybody could have anticipated.
So I think, and also what's been proven in the last few days is that OPEC is not the beast it once was. And in fact, the first time about a year ago when they announced in some cushy Viennese room that this is how it was going to work, the world according to OPEC, and suddenly it's actually, now hang on a second, it's the independent oil producers of North America who are running this market and who are determining the price. And those are the people that have got incredibly cheaper very quickly with better technology. So that should translate through to better news for consumers. But unfortunately for us, in amongst the fragile 5, which I've seen has been whittled down to a fragile 3, because India and Indonesia have been chucked out of the fragile 5. They said, okay, they're looking a little bit better.
Fragile enough.
No, they're looking a little bit better. Yeah, they're not as broken. Unfortunately for us, because our currencies are weakened so much, we're not seeing the benefits as consumers.
No, here we got oil at 7-year lows. Let's move on from Anglos. Let's give Joseph some breathing room. We've got oil at 7-year lows, $40-something a barrel, low 40s a barrel. The Rand practically 15 to the dollar. We should be celebrating the equivalent of a massive pre-Christmas tax cut as a result of oil as cheap as it is. The rest of the world, the dollar-based world, the pound-based world, the euro-based world, is going to get a big growth spurt from this. And we're simply not, Joseph.
Well, we can't celebrate because remember the economy is not pumping really. It's 1.3 growth rate. So it is really quite pedestrian. The second thing is that, with the job cuts that are being announced, we saw South 32, Glencore is still announcing, and the restructuring you're talking about. So certainly from a government perspective, there's nothing to celebrate, despite the fact that the oil price is quite low. I'm not quite sure if this will be beneficial for Eskom, because they're complaining about coal prices, and also they had quite a lot of money they spend on diesel. So they could be laughing, but I think in general as South Africans we can't be, purely because the rest might go up and inflation might pick up. So the Christmas is not really there yet for us, because government still needs to deal with a lot of the things. So if there is reduced revenue from a tax collection base, the students are calling fees must fall. So the allocation for next year for me, I think is is going to be quite tough. Agriculture, we have a problem there. So as much as it might look a little bit rosy, but we still have to wait for America to increase rates as well.
Yeah,
rain must fall.
Rain must fall. Rain must definitely fall. We need lots of rain, and in the right sort of areas. Give me then a sense of what we do with investments, because if you've sat this year in South African industrials, you've done okay. South African financials have come off the boil very dramatically since the interest rate cycle. Clear indication showed that the way was up. What on earth do we do? December's meant to be relaxing. I can't relax. I don't know about you.
Well, that's because you're around your little kids.
Yeah, exactly.
That'll come in 10 years' time.
They'll look forward to it. But I'm being kept awake at night as well by worries about money.
Look, I mean, I think when you're thinking about portfolio construction, anyway, the way we think about it is it's just a calendar event from 31st December to 1 January. You must think about specific themes you want to be invested. And as you pointed out, I mean, there are specific themes that are done well. And I think there will be some that will continue to do well, specifically in the kind of pharma medical space. We still like Discovery, Mediclinic, and Aspen. Aspen being one that have come off the boil. Yeah. Why? Because they've got a big business in Europe. Why? Because they have to buy the raw products in dollars, and then they have to manufacture them here, and then they have to sell them in Europe. So it's been tough for them, but we will carry on buying the same shares we've been buying for half a decade. In some cases, we've been buying the same companies for 10 years.
No, okay, but that's not very helpful, Sasha.
What I'm saying is a calendar year, Bruce,
of course,
shouldn't form part of your decision.
Yes, I realize that this is a media concoction and not a sophisticated investor concoction. But here we're sitting at a time where a lot of people have time off for the first time in 12 months to reflect and to think about where they put their money. Is it time to go into resources, Joseph?
Well, I don't think it's time to go into resources yet, Bruce. Somebody asked me about Sasha, so I said, what, just hang on a little bit. It will go down below 400, which it has. So I think we need to be very cautious. As investors, we look at quality, and all the quality companies, or at least within the resources, they're being hammered. So there has to be an entry point at some stage. So we need to be able to do a little bit more analysis, say how much basically is resources sector out there, outside the, on the ground, not underground, through derivatives. So I think that's one of the contributors to say, possibly there was a lot of it that was hedged there. So if we give it a little bit of time, possibly, I believe in January we should be able to have a very good idea of where to go. Yeah,
you're a very brave man putting a date on it. We'll get you back in January to tell us where to go. Sasha, tell me where to go. And not to
ignore.
Not to help.
I mean, some interesting, one of the best money managers of all time, Bill Miller, he simply ignored sectors that were too cyclical for him to call, because he said, and construction was one of them, and so was mining. So he just said, okay, I'm going to ignore those. But interestingly, he bought Freddie and Fannie just before, and that's where his track record kind of ended pretty badly. I think Citi was in there too. So I think all you have to look for, and it's so easy to say to yourself, I want to be in a business that I have certainty will be. So services-related businesses, I'm going to pick Bidvest, because you're going to ask me for one.
No, you're going to pick Bidvest, and I'm going to tell you, but the multiple is what?
Bruce, it could be 17, it could be 12, it could be 15.
Why does that not matter?
Because Bidvest is run by one of South Africa's finest allocators of capital, and he will continue to allocate capital more prudently than any investment manager probably in the South African. Why? Because his time frame is not 12 months. His time frames are years. And it looks to me, we're living in a modern world where as long as the board say, okay, you're sound of mind, sound of body, you can stay on for as long as possible. We're gone from that time.
But then we need to look at capital allocators. So PSG, great capital allocators. Bidvest, great capital allocators. Who else?
Naspers actually fall into that category, you know.
But then you've got to pay a massive price for those shares, Joseph.
Well, certainly. I think for Naspers you need to do quite a lot more. The share I like, which I talked about with you on my last visit here, is Discovery. I believe I'll still pump money into Discovery if they're banking, kind of foray or entry into the banking sector is going to come. Certainly, I think for the long-term capital allocator,
there will be no branches.
it is a very good share. So Discovery, some of the service companies definitely going to do well. So resources. So you're looking for support and possibly financial services. But again, there you gotta be picky. You have to pick the right management and the people who've got the right appetite for.
Isn't it interesting? Because for the first time in a very long time, everyone is talking about, actually it's about the people running the businesses that counts.
It's always been about that.
It always has been, but nobody's really drawn that much attention to it. Suddenly, it's become the most important factor once again.
Well, I mean, and I suppose in a Naspers context, it's no coincidence that they're moving towards all these classifieds. And who's running the business? Bob van Dijk. And what business he used to run before? eBay Germany.
Yeah, absolutely right. So, any good allocators of capital will get your investment thumbs up, Bidvest in particular. And Joseph Busha, you're sticking with Discovery.
I'm sticking with Discovery. I think it's got a great future. They have got a very good, loyal brands, and also some of their products are brands on themselves, like Vitality. So all they're going to do is basically say, well, here is another package for you.
Did you get to gold, Bruce?
Did I get to gold? That was Joseph Busha. Let's change the subject from J.M. Busha Investments and Sasha Naryshkine, Director at Vestact. Thank you, gentlemen, both for coming in this evening. It's not about the calendar, it's about the management. Some stock market stockings will be fuller than others. If that's not yours, then you better get yourself a decent money manager. From us here, good night.